Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend, Gates. This is Swing Trade video 3. If you have not watched Swing Trade video 1 and 2, you may do so before watching this. Before we continue, I would like to say to traders that this video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. It is primarily for the TSTW SYS 008 traders. Talking about swing trade. In the first part of the video, we were talking about a market pattern. There are specific free market patterns. In the second part of the video, we were talking about the Elliott wave pattern. 13 specific Elliott wave pattern. 13 specific stochastic pattern, talking about the 2-4 SP trading material. We have Fibonacci patterns, and also we have the chart patterns. If you look here, this is the patterns. Now, what I was saying to traders also was so important to know when and where, okay, do we have the pattern? Where and when do we have, okay, a running flat correction? Where and when do we have, okay, a bearish Gartley pattern? All right. Very often we see it, okay. So when and where do we see, okay, Gartley pattern or Fibonacci pattern? We will see very often. We will see when Elliott wave, okay, cycle is completed. We are likely to see after that Fibonacci pattern. That's the order. So we see Elliott wave cycle, which is motive wave plus corrective wave, followed by, okay, Fibonacci patterns. This is the normal progression. Sometimes it's not like that, but very often you will see it. One Elliott wave cycle is completed, followed by Fibonacci patterns. All right. So we want to know when and where do we see the patterns, but we want to align. This is very important. The market pattern first. Because we are swing traders, we are more experienced traders. We want to remain in the market for a longer period of time, which means we know what is taking place, we know the direction, we know we can forecast the market, and we want to remain in the market for a few days. So if you don't know how the market functions, you can't just place a trade and expect it to stay in the trader happily for 5 days or 3 days. You want to understand how the market functions and what is taking place. All right. So in this video, so we see now this is a pattern. In fact, what I've drawn here, this is the market patterns. If you see the red here, red horizontal line, another red horizontal line, is a red horizontal channel. You see red, this is a horizontal red channel, red on the top, red here. But there's another channel here. You see the blue one here, rising blue channel, okay? That's what I draw here. And then we have the green declining channel. You see, green is a declining channel. Green, this is a declining channel. Now, traders that were following understand this pattern because I showed you this picture to them before. The same thing when we are trading patterns, you want to be able to recognize the pattern. Sometimes, ladies and gentlemen, the patterns are distorted due to economy news, due to manipulation, due to volatilities. A pattern can be distorted. Now, how do you put the puzzle back together? If you understand the pattern perfectly, if you understand what is taking place, you can put a distorted pattern, okay, back together. It will come with more experience. Sometimes you will see, sometimes traders will look at MACD, they say MACD crossed above the signal line and they buy. But before that, what has happened? There was a tall candle. MACD was distorted, and a trader will start making a wrong decision because they couldn't understand that the indicator has been distorted or the pattern has been distorted, and they make a wrong decision. It's not because this trader cannot trade, it's because they couldn't, okay, recognize that the pattern has been distorted. So trading pattern, we want to understand the pattern and also be able to filter out distorted patterns. In this video, third part of Swing Trade video 3, we will talk about another, okay, essential topic about swing trading. Ladies and gentlemen, pay attention. This is the missing puzzle. Now, if you are a TST trader and you watch our video for some time, you'll say, George, I've seen it before and I know it. Great. Now put into use. All right. The most important thing is to know first. The second, to understand. Great. The third, practice, practice, practice will make you better. All right. So continue to practice. Okay. This is what we call the trading triangle. You will hear in many of our videos, I talk about trading triangle, align with the trading triangle, adhering to the trading triangle, and I say it 100 times. Now, when I start swing trading first, pay attention. This is a very short story. I placed a lot of trading stock on the NASDAQ 100, and on that day, I was green. What do I mean? My trade were in profit, and I was so happy, and I feel great about it because I opened more than God knows 5 trade, and all green nicely, probably running away nicely. The next day, ladies and gentlemen, all these gain were gone, and the price started going down, and my portfolio changing to red. And I don't like to look at red on my portfolio, and I feel bad about it. And I thought that the price would change direction, didn't. And it went down completely and wiped me out. And I learned something from it. But what I was using that time, I was using chart pattern and all other indicators that I use. But I wonder why suddenly everything that was working beautifully for me suddenly changed. The music has changed, and I didn't change my steps. And it worked on me for a long, long time, and I tried to figure out how do I handle that. And I have discovered what I call the trading triangle. Ladies and gentlemen, this is the missing puzzle. If you are swing trading, okay, pay attention, and you do not understand what is the trading triangle, some traders, the first time they hear about this trading triangle and they understand it, they took off straight away. I'm giving you also the opportunity to understand this very, very important subject. On the top of everything else is the market. You have to understand, in the first part of the video, in the second part, we were looking at financial instrument. We look at the USD yen, we look at the Euro GBP, and we look at Altera stock. These are individual financial instruments. We are here, we are in the blue. This is the section here. If we stop in this group, the blue, okay, zone, we can make a lot of bad decisions. We need to start from the top, the red zone first, and then switch to the yellow zone before coming here. But you can see in the first part of the video, talking about swing trade video 1, swing trade video 2, we were in this session. A lot of swing traders will make their decision in this blue zone. They will forget about the red zone, and they will forget about the yellow zone. They will not even pay attention to what is happening here, and what is happening here, and what is happening here. They are cut off from the market, and they are doing their own thing, in their own island, and they are likely to lose. It may work for some days, but if you want to remain in the market for long, you want to do it in an orderly manner. Okay? So I invite you now, the first thing you want to do, so you may start doing your analysis on the blue zone like I did now. I'll show you in the first video, second video, okay, market pattern, chart pattern, everything else. Now, you see the signal, you see the setup. Now align everything carefully. Now go back to the blackboard, okay? What is the market doing? The market is what? The S&P 500. The first question, is it at a support level? So you are very, very bullish. Is the market at a support level? If it's at a support level or at a cycle point, if the market itself is bullish, great. All right? So we may use the market pattern for the market itself. Check the S&P 500. Is it in a rising channel? Is it in a declining channel? Is it in a horizontal channel? Is it at a support level? Where is the S&P 500? Great. All right? So if we do our technical analysis in the blue zone, and we see that the market also is bullish like the stocks, we have a good start. But if, for instance, we are very bullish, but the market is at a resistance level, we need to be careful. How do you buy at a resistance level? You will wait for the price to break above the resistance level, and wait for the price to come back and retest the resistance level, and wait for the price to turn around before you can be bullish. But in that zone, you still know that there are bears in that zone. You need to trade carefully. So if the market is at a resistance zone and we see a lot of stocks that are bullish, we need to be careful. I can tell traders, since the beginning of this year, 2013, I did not buy any stock. In fact, I was trading currency alone because I don't like where is the market right now. It's at a resistance zone. It has been going up, gorgeous, but it's just myself. All right? So the market first. After we finish with the market, we want to check the sector. What's happening in that sector? All right? Check the leading stock in that sector. All right? The leading stock in that sector. For instance, you are trading stock that are listed on Nasdaq 100. Check Nasdaq 100. What's happening here? Check the leaders of that group. The leaders of Nasdaq 100, we have Apple stock, Google stock. The leaders can change the dynamics of the sector. So we start with the market and then the sector before the financial instrument. So if you do your technical analysis, as we have done it for video 1, video 2, we check the market, we check the setup. Great, everything went perfectly. We know that the leaders, the economy news relating to the stock or to the market itself can change the dynamics of our technical setup. This is where a lot of traders get into trouble. Like last Friday, there was some news regarding Japan, all right? And people start selling the USD yen, all right? Because of the inflation policy in Japan, all right? Suddenly, okay, the price of the goods are not going up in Japan. They are going down instead. All right? The central bank is under pressure after buying all the assets in the market, quantitative easing. Well, there are other conflicting information that were released on Friday, and people start selling the USD yen big time. We were expecting it to go to 10022 before we sell, but it started going down straight away. Hedge funds start taking their money. The economy news can change the dynamics of the financial instrument. This is where a lot of permanent technical traders get into trouble because of the way their mind functions. They are looking for double top, they are looking for double bottom, they are trading in their channel, they are doing their own thing. They don't want to go to Google Finance, they don't want to check Yahoo Finance, they don't want to pay attention to the economy news that are released. But the good news or the bad news is that now that we have many high-frequency traders, many hedge funds in the market, employing a highly intelligent people that are busy checking what is happening on Twitter, on Facebook, and checking the news by the second, adjusting to the current economic environment, a lot of retail traders are forced to start paying attention to the economy news. It's not going to be like before. I encourage traders to start paying attention to the fundamental and to the economy news. That is happening all the time. The market will continue to be volatile as we see more market leaders, market participants, hedge funds, banks coming to the market and making decisions relating to the economy news. Retail trader will be forced to do exactly the same thing. So after we do our technical analysis, we check the market, we check the setup, we must keep eyes on economy news. If you are lazy, you may find it difficult, but give it a chance. Go step by step, all right? Go to Forex Factory at least, okay? Check the economy news. If you trade stock, pay attention to the earning seasons. You see this month of April was earning season. Economy news, boom, 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 will change the dynamic, the technical setup. So you see those tall candles, those of volatility coming to the market. The economy news, some of the economy news will be released after the market is closed. And you want to be aware of that, especially on Monday, on Friday, portfolio adjustment, preparing yourself, for the next week. All right? So the key point in this video is the trading triangle. The market first, S&P 500, the sector before the financial instrument. Now, if there is a very important news affecting market leaders like ExxonMobil, Boeing's, or Google, it may affect the market itself. That's why we have the inside triangle. The leaders, the economy news, and the fundamental. These three things can quickly change the dynamics of the market. Last year, beginning of last year, we were showing traders Microsoft stock. We were telling today it's very, very bullish. And suddenly, no one was buying Microsoft. But look what's happened. When, as soon as Microsoft released their earnings, you can see how the stock was running, okay, very, very fast. This is about the economy news, okay, changing, okay, the dynamics of a financial instrument. Right, you see here how the price gap up running away. This on the daily chart. Okay, this is for Microsoft. Since last year we were talking about this. This stock is bullish, 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 and blah blah blah. Now suddenly it take off last. You see, so the economy news, the fundamentals, the market leaders can change the dynamics of the market. So the market may be bullish, and suddenly one news out of nowhere. All right, and boom, high frequency traders, hedge funds, big market players making decisions according to that economy news that will change everything. And if, as a retail trader, you are not also catching up, so to speak, with these big players, you may likely to be behind. And you don't want to be behind. You want to, okay, walk in the footsteps of the big market players. This is the missing puzzle. As a swing trader, you want to trade Microsoft, know when the Microsoft is going to release their earnings news. Check the fundamental regarding Microsoft, check their product, check the competition. What's happening with Microsoft? Their future, what are they likely to do? What is likely to happen to them? You want to know, yes or no? So, you do this verification, check the market. Is the market at a resistance level? Is at support level? Check the market leaders. What's happened to the market leaders? All right. Recently, there was some news regarding ExxonMobil. Let's bring on ExxonMobil. And ExxonMobil pulled the Dow Jones down big time. It was not surprising. In fact, there was sometime on the monthly chart. There was some week when the Dow went down big time, and people said Dow went down big time. Yes, because the market leader was going down and will drag, okay, the Dow Jones down. All right, all right. So you want to know the market leaders. If you want to know more about this subject of the trading triangle, go to www.dayprotrader.com. Click on the Market Watch. Click on Market Watch. Do not do it when you're on break. Do it when you have time. And understand, okay, the market leaders. If you are in India, check the stocks. Check the leading, the leaders in your index. If you're in Australia, in Canada, check the leaders of your indices, okay? And pay attention to the leaders. If, for instance, you're trading Dow Jones, you want to know the leaders of the Dow Jones, and you can be bullish towards Dow Jones. If you see that the leaders of Dow Jones are displaying a bearish pattern, that would be completely, okay, stupid decision. One must pay attention to the leaders of the sector before trading the sector, all right? So those who are trading ETF or trading sectors itself, you need to pay attention to the leaders. So the trading triangle, we allow traders because why? A lot of traders can swing trade, in fact can trade, and they know that. But to remain in the market and to be profitable, okay, requires more skill. And one of the skills is to understand how the market functions, the market pattern first. We want to align, okay, the Fibonacci pattern, the 8-year wave patterns, the chart patterns with the market pattern itself. We want to aligns, okay, the stock or the financial instrument with the market, and we want to align also the stock with the sectors. We also want to understand, this is about understanding, so you know how to swing. Now you want to understand how to swing trade, all right? You know how to swing trade, now you want to understand how to swing trade. This is about training to become a successful swing trader, so you can make excellent decisions. You may go and download on your smartphone the Bloomberg application or the Google Finance or the Yahoo Finance, okay? There are many free, okay, economy news. And during your own time, you may check the economy news, check the analyst upgrade. This is another thing that talking about news can change the dynamics, the technical setup, analyst forecast, analyst upgrade, analyst downgrade. These are the few things trader will learn. But if you think it's too much for you, Pay attention at least to the market and the specific stock that you are about to trade that will allow you to avoid making a wrong decision. Alright? I hope you have learned something from this video, swing trade video 3, and will put into use to make excellent swing trading decisions. Until the next time, enjoy yourself and be very happy. We are the TSTW SYS 008 traders. Speak to you soon.